How's it going, everyone? Thanks for joining us in this week's video. Today we have Ash with us. So Ash, if you want to give a quick self-introduction and what we will be going over in this video.
Thank you for having me. I'm glad to be able to share my experience with you guys. I would like to talk about my experience with finding a model and what it took to get there. I also want to talk about some of the psychology and risk management that I had to go through developing this model. It took a lot of time to get to this point, so I would like to start from the very beginning of my experience to the point in time where I developed the model.
Sweet. So let's get started then.
Perfect. So then I guess start with like the very beginning. The very first session that I had even thought of doing anything like this working, I graduated school, graduated with a psychology degree from a university in New York. Believe it or not, the psychology degree has helped me tremendously in ways that I didn't even think was going to happen because there's just so much psychology that goes into the market. After school, I went and got a job. Was a New York State arbitrator. Won't really go into that, but it was a full-time job after school, in which having that career, they provided a 401k and the company was matching it and so on and so forth. So bringing the idea of the stock market to my mind was generated from getting a full-time job. I wasn't really thinking about it before that. Before that, I was just trying to get through college. But honestly, the first time that the whole idea of the stock market came to mind, it became very fascinating very quick. I'm very intrigued in learning as a whole. So, like, just having the ability to gain more information and obtain more perspectives is very intriguing for me. So, I do like a lot of reading, and I like to travel as well. Like, I like to gain as many perspectives. So, when they brought up the 401k, that instantly made me look for more information, right? So, and like, usually, I mean, I guess majority of the time, like, everybody instantly Googles something, right? So it's like you go and ask questions, and it's usually in Google. So, and as soon as you start typing things into Google, you get all those targeted ads. So, I was just looking for information in regards to my 401k and trying to educate myself on the stock market. Just really trying to get an understanding of even where my money was going, because of the 401k plan that the company provided. Just wanted to know like where my money was going. But I would say that quite literally was the beginning of the rabbit hole. Um, So it was a very like organic way of coming about it, and it was through work. Very happy that it happened that way instead of some euphoric way. It wasn't like I heard somebody won the lotto, so you know I want to participate in that. I think uh, working for it definitely helped my whole mindset moving forward. Working and having a stable income provided me with the opportunity to learn without putting all of the risk on the line. And I do have to say, like, if there was one place that I would want to start, that would be it. Because I do know through meeting people through this industry that not everybody has that opportunity to work and gain exposure through the markets by having a steady income, right? So it's like I understand different countries have different capabilities, but what I'm trying to refer to is the risk of learning in the stock market is greater than uh, if you didn't have a job. You didn't have a job and you're trying to use your last dollar to teach yourself in trading or the stock market, there's going to be a lot of emotions that come with that. There's going to be a lot of different psychology that develops from it. So it was just nice to have like a organic way of starting this through having a full-time job. Um, Instantly, once I started making those, questions, once I started asking those questions on Google, you instantly get targeted by, any of those paid advertisements. So, instantly comes the trading gurus and the signal services that will, supposedly, you can turn $10 into 100,000 in 2 weeks. That's essentially like the inception of where this started. Through work, trying to figure out what a 401k is and learn more about it. I'm very glad that I got to study psychology in college. It provided a very deep understanding of the way people think, way people feel, the emotions that come from it, the reactions that you have, and the nature in which us humans just, um, you know, go about these different experiences. So, in terms of when I was starting, the psychology is important because, and I guess I kind of already mentioned it. When you're first starting, uh, it's very new, and anything that is new is either going to provide some sort of anxiety or stress because you don't know the answer and you want to know the answer. But in terms of something that deals with money, there's then that elevated feeling of wanting to get it correct, or the risk that's associated with that is whatever is relying on the money. And that's why I had mentioned the full-time job. Like, if you are trying to get into this industry and you are not working full time, or if you are not working to fund your trading, then you're going to experience a lot of psychology, a lot of thoughts and emotions that might deter you from your overall goal, right? So, like, let's take a real world example. If you are, 21, 22, 23 years old, however old you are, it doesn't really matter, I guess, and you have rent to pay. If you are using that money that you should have used to pay rent and you go and lose it, blowing an account, trying to get funded in a prop firm, the perspective you're going to have on this industry is going to be very salty. It's going to be very toxic because you are now going to miss rent and your day-to-day life is going to be directly impacted contingent upon your results in the market. And so I'm here to try to shed light on my experience because what I have to say is that you should be working more. You should be working more is what it comes down to. Is your day job should cover all of your bills. Should even cover savings, right? And then you should go get another job or find a side hustle. Find a way to fund your trading. However you want to go about that is completely fine, and that's on you. But the difference here is the risk associated with risking anything in your life that is contingent upon that money is going to have an emotional response that you wouldn't have if the money that you were making was strictly supposed to be used for trading. So knew, if you knew that, this weekend I'm going to go drive Uber, right? My 9 to 5 during the week will cover all the bills. It covers some savings. I have no worries, right? My rent is paid. There's food in my refrigerator. The lights are on. The internet bill is paid, and I'm getting a little bit of savings. Now, if all of that is covered, you're going to have a sense of security to go out and have these experiences, risk that money to obtain these learning opportunities. Now, the way we're going to do that is working more. If you were to go Uber during the weekends and you made another $100, okay, you could have just bought your first prop firm account. And if you ask me, I'll gladly work more, right? Like if I don't have to risk anything that changes my health, my well-being, my rent, if none of that is on the line, the execution I might have in the market might be more confident, or you'll be more willing to obtain that learning experience because of it. And like the conversation starting here because it does start from the very beginning. Like if the first time you want to participate in the market, if you're using the only $100 that you have in your bank account to buy a prop firm account, the psychology that comes with that is going to be very intense. You're going to need to win, right? You're going to be driven to have certain actions that might go against what good risk management is, what good market psychology is. And it's going to deter your executions simply by working more or not working at all. So if you ask me, it begins with work. I think to even participate in the market, you first have to think about yourself. You have to think about what is good for you, what you have in your daily life, right? If your bills right now are $500 a month and your income right now is $1,000 a month. Okay, good. Your bills are completely covered. That is good. That's great. You should save the rest of that money so you still feel comfortable with yourself. If you ever have any health issues, you could use that extra money to take care of that. If you ever have to put food on the table, you have money to take care of that. Then go out and work more so that you can fund your trading. Because if you are going to have a different psychology than what is healthy for this market, your executions are going to be deterred. And it starts with working. I personally think that you take a look at yourself and your personal scenario and you understand that, okay, I need to work more so I can fund my trading. Now, on the flip side of that coin, if you choose not to, maybe if it's not available to you, then you have to understand the psychology that comes with that. Don't force yourself upon the market because you need to make this happen. Don't risk improperly because you want money. The market mechanics and the market psychology is going to remain the same. The way you are capable of handling yourself and how you approach to the market can be changed. You can choose to go work more. You can change your financial situation so that when you go to get these learning experiences, they can be more positive learning experiences. So now, let's take a look at the two differences, right? Like if you were the individual that was working more and you knew that, this weekend I just made $200 in Uber. All of my bills are covered. Now I'm going to go get a prop firm challenge because the money that I made was directly supposed to be used for a prop firm challenge. When you go to execute and you get into that trade and you're looking to aim at a 1 to 2 risk to reward, you're going to be able to implement that plan with less fear and more confidence, right? So you'll get your orders filled. And when they are filled, the very first moment you become profitable, you won't be so eager to trail your stop loss up into profits to only hold the position if it's risk free because you're willing to take that risk. You might actually reach for that 2R because you're not worried that you have to win or lose. And then the opposite side to that coin is the individual that needs to make this happen. The individual that needs to make this happen because they're not working, because they're forcing themselves upon the market, they're going to get into a position. And the very first moment that they become profitable, they're either going to be so fearful to allow the position to become a loser that they take profit at half a R, or take profit or trail their stop loss above break even and then get taken out at break even though your position hasn't been invalidated yet. And then they're not going to realize the mechanics of the market because they're allowing their emotions to judge their execution. In reality, it's going to be very hard to make any progress if you don't have the correct risk to reward. Implementing the correct risk to reward is going to take the right market psychology. To obtain a better market psychology, you're going to need to understand yourself and your finances.
I think the part that makes a lot of sense is once you understand the risk to reward, let's say you have a 1 to 2R, you only need to be right 34% of the time. You're not so fearful of losing, and that allows you to execute properly and not trade with fear and moving that stop loss just because you're afraid of losing.
People don't ever get the chance to understand those probabilities because they're so emotionally. And that's the part that they lose out on the learning experience because they're being driven by their emotions. And it starts with financially putting yourself in the right position to gain these learning experiences. If you're never going to gain the experience that is needed, that psychology that you learn from it will never be obtained. You have to allow the probabilities of the market play out. You do that by risking properly. Having control over your emotions and your mind will allow your execution to risk properly. If you never get the chance to see those probabilities within the market, then trying to act impulsively or on emotion, you're not going to get a good learning experience. And that is why, you'll become the classic statistic. The majority of people come here and do not make a living from it because they're incapable of controlling their emotions. So basically from there, I guess the next thing I would move into is like the beginning parts of it. So like it was like from the 401k came all of the gurus, paid advertisements, the signal services. Like I go from looking into like additional education about where my money is going to when you're sitting there at nighttime and you're on Instagram just looking at some reels, like the next time you scroll through Instagram and the advertisement is, oh, join my signal service, I'll show you how to turn $100 into $1,000. I'll show you how I made $10,000 in 2 minutes. It moves from trying to obtain some education to a motive to make money is really what it was. It was, yeah, the job is great and I'm doing what I'm supposed to be doing, but I am a human just like everybody else and I do want more. How do I Now that these people are saying that I could make more money, how do I do that? Right? So like I'm just like everybody else, started with, you know, classic retail uh, information, whether I went looking for it myself or joined these groups, and that was what was provided. I bought the groups, I bought the courses, and here's the information that you get. Majority of the time, you know, instinctively, humans just look to find information that they're able to recognize and then look to see what they could do about it, right? And that's kind of what retail is. It's like you open up a chart and you try to figure out a way to identify something. And then usually you start to see certain patterns happening over and over again. And that's the same thing that these retail signal groups were. It was like, you know, you're drawing triangles on a chart, or you're looking at a RSI, and once it, you know, comes out of oversold, they'll tell you to buy. Or, you know, they start drawing lines on a chart, and it's like price breaks out and now it's time to hop in some calls. So the first experience with trading was the signal services. It was the retail patterns. Um, there was nothing wrong with that. I think that is definitely the natural progression in which people learn, because it's a surface level way of thinking. I'm not saying that it's right or wrong, but I think it's what's mostly available to the industry. Um, when you think about ICT and some of those concepts, if you ask me, I think that is definitely a deeper dive into the industry. I think it's a further way of thinking about the information instead of what's surface level, just seeing what you can identify and moving forward with it. So I definitely don't think it's right or wrong. What I do think is, if you are profitable, then move forward with what you are profitable with. But that's what leads me to say, like, these signal services were not profitable. It was false information, and my experience with them lost me money. So from being curious of wanting to know how to make more money because of the 401k, I moved into the signal services, and I directly linked that to the targeted ads. I don't know if I would have ever even done that if they didn't just put it right in front of my face. Um, and that's just from like the Google search bar. Of course, like, first information I look up, the next thing I know, there's an advertisement for. That was basically my first year, between getting the job, starting to do research on it, and then being targeted by the advertisements. Um, and the Uber idea was my idea. I quite literally was Ubering. So that wasn't made up. I was working a full time job. I was Ubering on the weekends so that I could participate in these signal chats, and it didn't work well. So go right back to step one. And now we're in our second year. We go right back to step one, to working more again, right? Because it takes money to make money. But again, I'm not willing to risk my mental. I'm not willing to risk my health. So the day job is always going to cover all of my bills and my savings. So I'm going to go out and work more so that I can participate in the markets. I do think that this was a very healthy way of learning, because I never put myself in jeopardy. And that is one thing that I strongly will always tell everybody that asks me any questions, because there are, you know, a lot of people in the social media space that just want to show you their nice cars, or that they're traveling every single week, um, and maybe not point out what they had to do to get there. I'll gladly shed some light on that, and I will have no problem saying that I worked for it. Like, I did have to work extra to even get this experience to make any sort of progress. And the other point that I would want to emphasize on there is that the progress was not overnight. A lot of the advertising is like, you can make $10,000 in your first week, or I made $5,000 in the first 5 minutes of the market. Reality of the situation is you're going to have to go through a learning phase. No matter how long or short that is contingent upon the individual, but just realize that it's a you versus you business. What other people are doing, you should not compare to. I think that your experience is unique to yourself. So whether it takes you a month, a half a year, 4 years, 5 years, as long as you're risking properly to get that education that you need, I do think that you can achieve your goals. If you're not going to risk properly, I don't think you'll be around for long. So it was like the second year was like a testing year, I guess. It was like try this and does it work? Yes or no. Try this, does that work? Yes or no. I was looking inward in the sense of I was trying to do the work myself instead of going around the internet looking for the information. So instead of doing the signal services on the second year, I was still working extra, but this time when I was attempting in the market, I was coming up with my own logic or thesis on why or how something should happen, and then I would try it and see if it works or not. So it was like a testing. It was like an experiment. I would just I would make more money so I can try it again. And then when I tried it again, I was saying, do breakouts work? Should I be buying when this thing is going past this line? Or do moving averages work? When the moving averages cross over, should I buy it and hold it while price is staying above the moving averages? Or does the RSI work? When we are overbought, we should probably sell it.
Did you ever have any of those strategies that did work out for a certain amount of time before they failed, or were they all just kind of failures for you?
So during the second year, I was break even. Uh, some of the retail concepts do work, and this is when I realized that it's a matter of risk management. This is the moment in time that I realized it's not the strategy that you use, and that it's the mindset that you have and the execution that you're capable of implementing. And that's why I had mentioned the moving averages right there. At a For a while in my trading, I was just using moving averages. I was using the 9, the 21, and the 55, simple moving averages. Anytime the 9 and 21 would cross over, in either direction that it would cross over would be a long or short. And then I would use the 9 as my execution. If price stayed above or below, depending on if you're long or short, is how you understand to hold the position or not. So for a long position, right, if the 9 came from below the 21 moving average and crossed upward, I would take a long.
And then you would exit once it crossed back down below, I'm assuming.
Right. So then I would hold the position for as long as price stayed above the 9 moving average. Anytime price would close below the moving average, I would know it's time to get out. And so it's very simple logic. There's really nothing behind it. And that's what showed me that it's not a matter of strategy. It's not a matter of what information you're using. What it is what are you capable of identifying? And can you define yourself and your execution? Can you manage your thoughts and emotions correctly to withstand the amount of time that you have to execute or hold that position. The second year ended up being break even. There was many profitable times. There was many losses. I'm very happy that I was able to go through that experience because I was able to test a lot of things and see what did work and what didn't work. And through that testing period is what eventually got me to ICT. Finding that buying below the lows was working better for me, right? Because when the moving averages cross, you're gonna see that you're at a low, right? Like if your moving averages are pointing downwards and they turn to cross upwards, you'll see that you're moving away from a low. And so that's like kind of against the whole retail concepts of breakout patterns or, you know, support and resistance. Like when something breaks out, you're buying above the high. And that's opposite of what was going on there. So that is kind of what led me to ICT because when I then went back to researching and looking for the education, he was one of the individuals that were kind of preaching these smart money concepts or ICT concepts. What I don't identify, it's just information on a screen. It doesn't matter who made it, but ICT was one of the individuals that was preaching this kind of information, right? Classic buy side, classic sell side. You want to be longing below the lows and shorting above the highs. Um, him providing that type of information is kind of what led me into looking up ICT. So it went from first year being signal services that was not profitable at all. Second year was like a testing year, which I gained a lot of information. And again, I'll keep going back to working more. It was nice to be able to learn without ruining any of my own mental health or physical health, right? Like all of my rent was always paid. There was always food on the table. So when I went to learn, it was easier than if the money I was using was supposed to be for rent. So I did appreciate that, and the psychology that comes from that is very valuable. Then we moved into the third year, and that was just the third year was just documentation. What it was. It was strictly learning. I quite literally have gone through every single one of ICT's videos. I have the documentation for it. In Microsoft Word, Google Docs. I've quite literally annotated every single one of his videos, so it provided a greater understanding of the markets and how price moves. And with that, that right there was kind of the beginning of my model. This is what generated me using breaker blocks, me using FEGs, me using the New York Open as a way of creating a model.
Was there one video that stuck out to you with ICT beside, or was it just the unicorn model one?
So there was multiple videos that stuck out, and I do remember them because I quite literally saved them so that I could always reference them. Uh, Now, ICT provides a lot of information, and there's many models that you can create from it. So again, I think the individuals should look inward, meaning there is no right or wrong in terms of which model you choose to create from the ICT information. What should be done is what are you capable of identifying and how can you define yourself so clearly to use that real time? So whether you're using, OTE patterns, whether you're using FEGs, whether you're using order blocks, whether you're using breaker blocks, All of it could work if you implement the correct psychology and risk management. So, what you should do is use what you're capable of identifying. For me, those things that I was capable of identifying, one was the New York Open, because I was very familiar from the signal chats that you can't start buying options until 9:30, right? So I was already familiar with New York Open. No, I wasn't using options for the ICT information. I was just referencing the 9:30 Open. For me, the breaker blocks stood out because I was clearly able to identify it. The thing that identified it for me was ICT's core content, month 5, institutional swing points. There is quite literally a picture on the screen in that video where he's defining institutional swing points. You can see that there are two different types of institutional swing points. It's either a breaker block or it's a failure swing. And for me, the reason why I chose a breaker block was because you can identify the stop hunt. When price runs above a swing high, that aligned with everything ICT was saying about short above the highs, long below the lows. So if you know what a breaker block is, you know that you need to have that stop hunt. You need to have that run above the high or the run below the low to even begin searching. So that helped me identify it was the ICT core content month 5 institutional swing points. Now, to further that idea was the picture that came with it. In the picture of him defining the breaker block, he points to an exact entry location. The entry location is the breaker block. There's a picture in that video of a line chart. The line chart is a high, and it's a short-term low. Then that high gets taken out, creating a stop hunt. After the stop hunt occurs, the line goes directly lower, market structure shift, whatever you want to call it, clear and decisive displacement, whatever you want to refer to it. After that displacement occurs, comes this diagonal line right from the breaker block. And on that diagonal line is a bullseye. To me, that was like, ding, 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 here you go. You get to identify multiple concepts, and then you have a defined entry location. He's telling me that I should be entering right here. That was the first thing in terms of the ICT information that really hit a light bulb. And then I started looking further into it. And this is when I started rewatching all of the information so I can comb through it to focus specifically on breaker blocks. And I realized when I'm going through the information a second time, I've already watched a breaker block video. In core content month 4, ICT does breaker blocks. And it perfectly aligns with the institutional swing points. So now light bulbs are going off in the head. It's like, all right, this is something that I'm capable of identifying, and I know when I want to be looking. Right? Because I'm already used to New York Open. That's the best time that works for me. So now I have something to use at New York Open. Let's go see if we can identify this. Let's show up to the market every single morning and see if I can see this happening in real time. So I attribute a lot of the model being created to ICT because he generated the ideas. But the other 50% of this model being created was the time that I put into it. I can quite literally tell you that I've showed up to New York Open for the last 5 years. I have been watching New York Open each time it opens. So repetition is the best way to create muscle memory. If you're not capable of putting the time in, you're not capable of focusing on one thing at a time, then it's going to be very hard to make progress. You need to gain that experience to ever get this information. That comes through screen time. There's no going around that. There's no signal seller that's going to provide you that information. You build the muscle memory by repetition. You show up every single morning until you've gained the experience. There will be conviction that comes in your executions through experience. Right? Because the more times that I saw the breaker playing out, I was like, he's correct. It does work. Why don't I try this?
I think another thing that stands out to me is you were able to identify what works for you, like what your brain saw in real time. I think so many people are focused on seeing every single concept and every single swing and leg of price that they get so lost, versus you just focused just on breaker blocks and displacement through that breaker block, and that was able to create a model.
I think that's very valuable information there. I think this is one of the things that deters people the most. It kind of comes from ICT as well, because the amount of information that he presents is a bit of information overload. Him coming out with the newest, shiniest object is deterring you from what you really need to be doing. What you really need to be doing is putting that time in to get that screen time to be able to recognize something. Choose whatever you're capable of identifying, but focus on one thing. And so you'll see it, in my documentation. For anybody else that has already seen this, they're just going to be telling me that I repeat myself all the time, but repetition is key. All the people that I trade with, all the individuals that I talk to, and the people that comment on my documentation, they're always asking, like, why the breaker block? Why the unicorn? Why this model? The key for me is less is more. Less concepts, and it's more defined. When you're trying to look for hundreds of different concepts, that decision making and identifying time is deterring you from price moving up and down. It's harder to make quality decisions when you have to make more decisions. So quality over quantity. For example, if you're only looking for a breaker block and you're only looking during 9:30, it will be very simple to understand if there is or isn't a trade. So we've taken out all of the decision making. We know exactly what we're looking for. So now we can get to the root of all evil, is the individual's ability to control their mind and control their emotions and how they can efficiently react to price. It's hard enough to create a model. It's even harder to control your own psychology and emotions to implement that model. So what I'm trying to say here is less is more. Quality over quantity. Stop trying to identify 25 different concepts, it's going to be harder for you to get into a position because you're constantly making decisions. Furthermore, the emotions and psychology that you have to control to even implement that position is hard enough. So why are we making things harder than they have to be?
I think a lot of people, they struggle to be confident in an entry because they first look at a breaker block. Then when price goes through that, then they're like, oh, I'll just look for this order block. Oh, I'll look for the mean threshold of this order block. Oh, now we're into an OTE. Oh, now I'll look at the rejection block. Oh, and now it's just a sweep. I'll turtle stupid. They just look for every single possible concept and entry, and then they get so lost in all those little concepts that they just can't actually see what is happening in the market.
That's the gold that I wish people would put out there more. Honestly, it's just instead of just flaunting your wins and boosting your ego, why don't we talk about the reality of the situation? So then, after watching the breaker block videos and showing up to the market each morning, it became very apparent to me that this was what I was capable of identifying. So I wanted to move forward with it. Then comes ICT on Twitter, and this was, to say the least, my confirmation. The confirmation should have been me putting in the work and the screen time, and it was, but there was still a sense of wanting to know more, right? Like we are human, so even when even when you have something, you still strive to get more. I don't know if that's because I was an athlete and it's like the competitive nature behind it, or if it's just me wanting something so much to the point that I'm going to keep putting the effort forward to get it. Um, where I was going with that is ICT then comes on Twitter and starts, going on his rants or providing his examples or doing his little short videos of market reviews. And some of the market reviews were the confirmations to my model. Uh, all of the information comes from ICT. So I'm not sitting here saying that I created the model. The model was created by ICT. I'm just saying that I went to ICT, obtained that information, put the time in, executed it, realized that it worked, and then once he started calling it a unicorn, it really gave me confirmations. There was many times where he would show up to a market review, right? And he would point out the unicorns that I was seeing real time, let alone calling it a unicorn. That's where the name came from. He would confirm that I was doing the right thing, right? So, and I've written all this stuff down, so I have the documentation for it. I'll go ahead and say one of the classic ICT quotes. In one of his market reviews, he, word by word, says, "The breaker is one of the strongest algorithmic entry patterns, especially if you have taken out liquidity at the opening price." Now, when you hear something so convincing like that from the individual that you learned it from, it really cements the idea. It really shows you clarity and gives you the ability to move forward with it. And this is when it became the only thing that I wanted to use. So I did go through many different models. I did go through a lot of time to get to this model. It took a lot of failures. It took a lot of ups and downs to get there. And I'm completely okay with that because the entire time I was working, I never put myself at risk while trying to obtain this information. I solely contribute me still being here to that. If you're not willing to put in extra work when you lose the only money you have, you won't be able to participate because it takes money to make money. So if you're not willing to risk properly the first time you liquidate yourself, I wouldn't be surprised if you don't show up again. Simply work more. Put more time in. Put more effort in. So now, the market reviews is what really grabbed me in terms of cementing this model, because it's engraved in my brain. The amount of times that I've watched these things is why I can say that quote off the top of my head. So it's market review after market review from ICT showing breaker blocks with FVGs and calling them unicorns is what created the model, right? So ICT created the model. I'm just implementing it. And through the documentation, a lot of people are seeing the experience that I have, and they're now using it as well. That's another form of confirmation in itself too, when hundreds, if thousands, if not tens of thousands of people are taking the same position you are or using the same entry function you are. It's not a luck thing at that point. It is a cause and effect relationship. If this happens, then I can do that. If this doesn't happen, I know I don't have a position to take. It simply comes down to discipline and patience. Going back to the psychology here, this is another thing that deters people. If you're not capable of creating a model, that's one thing. But when you have a model and you can't hold yourself to that model, you're simply not disciplined. You're simply not patient enough to wait until your model is formed. You have to be able to submit to time. If you cannot submit to time, then you are going to start doing things emotionally or impulsively. And when you do things impulsively, that's when you're going to liquidate yourself. So if you have a model, implement that model with discipline. When that model is not present, have the patience to wait until it is. Patience is a virtue. It's against our human nature to do it, and that's the hardest part. We were raised to, work harder means more money. Put more time in, get more results. But this is not a day job. Working more does not correlate to more money here. Matter of fact, being more patient correlates to more money here. If you have a problem not being able to do nothing, then this industry is going to be hard for you. Because a lot of the time, it is spent doing nothing. If you are so impulsive that you have to press buttons, I don't think you're going to be around for long. Instead, while you're not pressing buttons, go and watch these videos. Go and watch the ICT reviews. Right? I have a whole list of breaker block videos and market reviews that I've specifically combed through and saved so that anytime that I'm not doing anything, I just go back and watch them. Right? Here's another quote from ICT. Came directly from his market reviews. Right? So in one of his market reviews, ICT refers to the unicorn. Again, that's where the unicorn idea came from. He says that right there is a unicorn setup, folks. That is one of the wonderful setups that repeat over and over again. It's there every single week, multiple times on many different time frames. This setup alone is a model in itself. See, now when the individual that you're learning all the information from is saying things like that, it really cements the idea that here's your model. Here's your model. Take it or leave it. And now when he's telling you that that model that he just handed you is one of the strongest algorithmic entry patterns, especially after you've taken out liquidity at the opening price, kind of rings a bell. At that point, it's like, why aren't we focusing on this? He truly believes that one of the strongest algorithmic entry patterns. Why am I not just focusing on this? Remove all of the noise, remove social media, remove the signal sellers, remove the shiny objects. Stop trying to identify 20 different concepts and just focus on your model, because your psychology is going to be hard enough to deal with anyways. Having to deal with two different things at the same time is becoming lower probability. So I was going through my third year, just to also give people insight to a timeline. Like, it really doesn't matter how long it takes you to get there, as long as you get there. Some people it might take 1 year, some people it might take 1 month, some people it might take 4 years. It really doesn't matter. Other people's experiences are not your own, so whatever works for you is what you should go forward with. In my third year, ICT cementing a specific model through all of his market reviews and his content that he provided on YouTube is what made me move forward with one thing, right? Like, when somebody in the market that has this amount of experience tells you that this is one of the strongest algorithmic entry patterns there is, it really cements the idea that this should be your model. And then he comes out with multiple different market reviews on Twitter showing examples of it. And there was one at one point in time, ICT like gave us a homework assignment, and he was like, put your model on the screen. And he said something along the lines of like, it has to fit on a business card or whatever. And then he puts his model on the screen, and of course it's the breaker. So as soon as he again puts the breaker right in front of us, it's just screaming to me saying like, this is what you have to move forward with. So at that point in time, that was like, the light bulb moment where I'm just going to move forward with the breakers. I'm going to see what I could do with it. And anytime there's not a breaker on the screen, I'll understand that there is no trade for me. I was already used to the 9:30 open, so the 9:30 open was the time that I used. Other than me having experience with the 9:30 open, it also fit my daily life. So that is one thing that I would say to everybody is that you have to figure out what works best for you and your daily life. If you have a job that starts at 11 a.m. in the morning, then okay, show up to the New York Open. If your job starts at 9 a.m. in the morning, then maybe you want to start hunting before work starts. So show up at 8:30 a.m. in the morning. So you have to figure out what works best for you and then align yourself with your model. Once you can do that, it then comes down to submitting to time. You're not going to get experience 20 times in a day. There's only one market open, right? So you have to show up to the market every single day. To get experience, you're going to have to submit to time. So for the very eager folks that want to make hundreds or thousands or whatever number you want. For all of the eager folks that want to make money now, you might as well go play the lotto, right? Like, we're not here to gamble. We're here to create an edge, figure out if it works for you. And when it does, then you're capable of imposing probabilities. At that point in time, it's just a matter of risk management. Let me put that into different contexts. When you're capable of identifying something and you understand how to use it, all you have to do is risk properly to start to make progress. As long as you're not deterred by emotions or thoughts, when you're capable of putting yourself in higher probability situations, it is then a matter of risk management. The way that you do that is by creating a model. Luckily for me, ICT created the model and I ran with it. So thank you to ICT. I do really appreciate all of his time and his effort for putting all of that information out there. And now I have years worth of experience to back what he has shown. After that third year, I only moved forward with the unicorn. I was only looking at indices because I was used to the stock market. So talking about NASDAQ or talking about S&P 500 was completely familiar to me. So using ES or NQ made sense to me. Therefore, I would show up and watch NQ or ES for the 9:30 open every single morning. Once I compiled an undeniable amount of evidence showing that this model works, that is when I started using live money. I'll just say that again because everybody is so eager to have it now, right? I already told you about year one, it didn't work. I then moved into year two and how it was more of an exploration phase. Then year three was the cementing of the model. And then comes work, more work, putting in the time and the effort to gain the evidence to see that it even works. Once I had that undeniable proof, that's when I started with AMP. I have a live account on AMP. I already had my Thinkorswim account. That's with TD Ameritrade, now owned by Charles Schwab. So those two were my live accounts. I also got into the prop firms at this moment in time. So year three and year four, we're starting to move into year four here. Only using the unicorn model, submitting to time, and risking properly is literally the key that is even keeping me here today. If I was still doing what I was doing in year one and year two, I don't know if I would be able to say the same. If I wasn't working that overtime to even get this experience, I don't know if I would have ever even made it to year three or four. So at this moment in time, now I'm starting prop firm challenges. Now I'm working on my personal accounts and seeing the progress with the unicorn. It was the light at the end of the tunnel that I always needed. And that's why I'm so thankful for ICT. Once I found something that actually worked, I was then able to focus more on my psychology and my risk management to understand the mechanics of the market. Understanding that I don't need to get rich today. Understanding how to deal with losers. Understanding how to deal with winners is what made the progress. Having a model is the vehicle that gets you there. You have to at least get to that vehicle to even start making progress. So you have to risk properly to even get to that point in time. Now, year 4 was the beginning of the profitability for me. Year 4, I started passing prop firm challenges, started making progress in my personal accounts. And again, the documentation is there. So it was more of a reinforcing of the edge. I wouldn't even implement any other strategy. I wouldn't even think about trying anything else at this point. This was simply due to waking up and completing the same justifications to my actions every single morning. I was not thinking about changing anything. I was not looking for the newest, shiniest object. At this point in time, I hate to say it, but this is the point in time that I stopped following ICT on Twitter because I didn't want to listen to all the rest of the stuff. I also hate to say it, but that's what gained me more focus to put me on the right path to where I needed to be. Because the reality of the scenario is this is you versus you. So if you are not capable of withstanding all of that noise, you need to remove yourself from it and focus on yourself. That's what happened for me. I spent my time in Discord just documenting my trades, waking up every single morning looking for a unicorn. If there was a unicorn, I would take it. If there wasn't a unicorn, I wouldn't take it. It's as simple as that. If my model presented itself, I would understand how to risk to take the opportunity. If the model didn't present itself, I would turn the computer off and go to the gym. I'm not going to entice myself to look for anything else. So now it's a matter of implementing the model time and time again, completing the justifications to your actions every single morning, and allowing the probabilities to play out. And this is usually where people go wrong. People don't really understand the probabilities and risk management. People might have a model, but the first time you go on a 4 loss streak, 5 loss streak, 6 loss streak, they're going to look to try to change something. That's just the mechanics of the market. You're going to have winners, you're going to have losers. That doesn't mean you should change something. Allow the probabilities to play out. There's a beautiful screenshot of win rates that go over this. You don't need to have a 90% win rate to be profitable. But not everybody focuses on that because they just want to go boost their ego on Twitter, or they want to follow the guy that shows the highest payouts or the best stats, when that's not reality. You're going to have winners, you're going to have losers. You have to understand the probabilities and implementing the right risk management. And I'm saying this because putting the time in with the model is what showed me that. It is a profitable model, but it does win and lose. It's a matter of submitting to time to see the results for an extended period of time. Don't create a model and then the first time you go on a 5 losing streak, automatically think you need to change something. Your model is your model for a reason, whether it's because you can identify it, or it's because it works, or it's because it fits your personality. Use it, understand probabilities, and implement correct risk management. So now year 4 was firm challenges, personal account, it was the unicorn the entire time. When the withdrawals started happening, that was another confirmation to the unicorn for me. This is again what showed me I am capable of doing this, and I only need to use one model. People always ask me if I have variations or if I, do I need to change it for, seasonality or what do I do when this doesn't work? Nothing changes for me. I have one model and I move forward with it. So then we have year 4. Year 4 was the beginning of the profitability. I'm not ashamed to say it. I'm very happy that I had to go through the learning experience, and I'm very glad to see where I am now. After implementing the strategy over and over and over again, I'm happy to say that I could easily answer any questions or hand out any information about it because of the experience that I have with it. That doesn't mean that this is the model for everyone, right? There are many models out there that are profitable. So for someone to sit there and say, this is right or that is wrong, I would have to disagree with them. You can be profitable using EMAs. You could be profitable using support and resistance. You can be profitable using the unicorn model. It is a matter of understanding the psychology that the market provides, and it is a matter of implementing the right risk management. I will gladly walk you guys through the model so that you guys could see what I'm talking about if you haven't already. The unicorn model for me always begins on the daily. The daily is the higher time frame order flow. I get my bias from the daily. I want to be aligned with the higher time frame order flow. The way that I find bias is through the understanding of internal liquidity and external liquidity. Internal liquidity is FVGs. External liquidity is swing highs or swing lows. So let's mark it out on the chart on the screen. You can see that GU's daily price is currently located at a daily bearish FVG. Since the price is located at a daily bearish FVG, I would look for price to move from here to a swing low. Since GU's price is currently located at a daily bearish FVG, I would be looking for it to move to the swing low. Therefore, we would have a bearish bias. From the daily, I would move to the hourly time frame. The reason for that is time frame alignment. Now, I know that there are a lot of London traders. Therefore, we're going to take a look at the London session since that is the next session. Okay, from the daily, we move to the hourly. That is because of time frame alignment. On the hourly, we are looking for areas of interest to look for our entry function. Since we are bearish, from the daily chart, we are looking for bearish FVGs or a swing high. These are the two areas of interest that I would look for a bearish entry function. We can see on GU, heading into London Open, you have one bearish FVG, as I'm pointing out now, and you have one swing high. So you have two areas of interest to look for a short position during London Open. From the hourly chart, we move to the 5-minute chart. Again, this is because of time frame alignment. Now we're going to take a look at London Open. London Open is 2 a.m. Eastern Standard Time. We have our areas of interest here. We have the hourly bearish FVG, and we have the hourly buy-side liquidity. We wait for London Open to occur, and when London Open occurs, we are waiting for price to get to one of our areas of interest. As London opens, we see price move to the hourly bearish FVG. Since we are at an area of interest, we can begin position searching for our entry function. The entry function I use is a breaker plus an FVG, or as ICT states, a unicorn. First, we would need a stop hunt. Then we would need displacement through the breaker block. In the displacement, we would need an FVG to align with the breaker block. Let's see what price does during London Open. Price has moved to the area of interest. Now we would need to search for a stop hunt. We see that we have a swing high formed here from these 3 candles, seeing that each candle has a lower high, then a new high, and then a lower high. So we have a swing high here that could act as a stop hunt. If price runs above this swing high, we are getting a stop hunt. Price then begins to create a stop hunt. Now we need to wait for displacement through the breaker block. The breaker block is the lowest down closed candle before the leg up that took liquidity. Going to mark out the breaker block. When the breaker block has consecutive closes in a row, we use all of the consecutive closes. At this moment in time, we need to see displacement through the breaker block with an FVG aligned with the breaker block. Begin to get displacement, but we have not displaced through the breaker block yet. We almost displaced through the breaker block, but as you can see, the candle could not close below the level. We are still waiting for the displacement. Price finally displaces through the breaker block. When price displaces through the breaker block, it leaves an FVG aligned with the breaker block. At this moment in time, this would be the first instance that I would be setting a limit order for a short at the beginning of the breaker block. Short would look like this. We always enter at the beginning of the breaker block. We always put the stop loss on the other side of the breaker block. And then we aim for 2R. Let's see what happens. Hopefully you get filled here. Now this is the exact reason why I use futures instead of Forex. In Forex, you might not have gotten filled here because of the spread. Price barely touches the breaker block and then moves in the intended direction. In futures, it has more accurate entries. You're more likely to get filled at the breaker block on futures. Nonetheless, price starts to move in the correct direction, and this is where psychology comes into play again. For me and my model, I only accept validation or invalidation. So when I am setting orders, I am setting a limit order for entry, I'm setting a limit stop loss, and I am setting a limit TP at 2R. Once I'm entered into the position, there's only 2 things that can happen. I either lose or I win. I do not accept break even. I do not trail my position. For the individuals that are too fearful to hold a position, they're going to have a hard time completing this execution. For the individuals that are too greedy to take their profits, they might not see the TP get filled. I do not allow any emotions to deter the execution simply by making it a mechanical process. The entry location is always the same spot. The entry time is always during the opening times. The management during execution is always TP or stop loss. It is simply accepted before the risk is taken. I understand that I'm willing to lose if I am wrong. I understand that if I'm going to win, it's going to be 2R, and I'm going to accept that. I don't need to reach for any more. Falling in love with the process and completing the justifications to your actions time and time again is what's going to create the consistency. Implementing mechanical ways of executing is going to help you stay out of your emotions or not be deterred by your thoughts. So at this moment in time, the position would be nicely profitable, but I have nothing to do in terms of management. I'm not trailing my stop loss up. I'm not moving my TP. I'm simply submitting to time and waiting. Price continues to move in the correct direction, and then it begins to turn around. I'm not fearful that it almost hit my TP and now it's about to turn around. It is either invalidation or validation. Price begins to turn around, and the individuals that trailed their stop loss probably get taken out for half an hour. When in reality, we have not hit invalidation or validation. So this is a moment in time of being patient. Price then starts to continue to its intended direction, and we see 2R. Now, the entry function can be mechanical, but what do you do after you have executed? Are you the individual to take another position because you feel like you have some cushion to work with? Or are you the individual that plays defense? Are you the one that says, I'm going to protect my profits and I'm going to go hit the gym? Entry function is one thing. A model is framed around psychology and risk management. You can have an entry function, but if you have the incorrect psychology, you will not be profitable. The individual that thinks he has a cushion to work with is going to go back into the market and lose the profits he just made. The other individual that decided to turn the computer off and go to the gym is going to have a very nice day staying green. It's a simple business decision. You can focus on risk management and implement the correct psychology, or you can impulsively act and ruin your hard work. With that being said, now that you've seen my entry function, I'll tell you more about risk management. I only trade 1 time a day maximally. I only trade 2 times a week maximally. I do not take multiple trades in one day. It does not matter if I won or lost. Same thing goes for the week. If I've taken 2 trades on the week, I'm done. It's a matter of understanding yourself. If you are that impulsive individual, you need to put those restraints on yourself so that you don't over risk. Now, the next thing is position size. You can over risk by taking too many trades, or you can over risk by taking too large of trades. Understanding your position size is key to psychological development. If you are going too large in position size, the psychology that develops from that is going to be very negative or too euphoric. When you are too large and you win, then you think it's going to be acceptable. When you are too large and you lose and you liquidate yourself, you're never going to want to do this again. You have to understand yourself and where you fall on that spectrum. For me, it's less than 1% of the account per trade. Aiming for 1 to 2 RR. 1 trade a day maximum, 2 trades a week maximum. The only trade that I'm going to take is at the opening times, and it's going to be the unicorn. The unicorn is going to be generated from a higher time frame level found on the hourly chart. Those higher time frame levels that I'm looking for are FVGs or swing highs or swing lows. I'm basing my decision on the daily bias. I look at daily bias through the scope of internal versus external liquidity. That's the entire model. Okay, now that we took a look at a short position, let's also take a look at a bullish position. We have NQ on the chart now. We will take a look at New York Open, as I am a futures trader for New York Open. So let's take a look at NQ. NQ on the daily has clearly been bullish for almost the entirety of the year. NQ continues to close above previous day highs. It looks like it's wanting expansion. We're going to have a bullish bias heading into New York Open. So we're going to look for areas of interest on the hourly chart. Those areas of interest will either be bullish FVGs or swing lows. Let's move to the hourly chart. Now let's look for areas of interest, begin position searching. We have a swing low here, which is also inside of a bullish FVG. We also have a bullish FVG here. These would be the areas of interest that I would begin position searching. Now we would move to the 5-minute chart to look for our entry function during New York Open. The next candle will be New York Open. And we can see heading into New York Open that we are about to get a stop hunt. Price looks like it wants to run below this swing low. This is a stop hunt because it has higher lows on each side of it. So this is a swing low. Let's see what New York Open does. New York Open creates a stop hunt into our higher time frame areas of interest. Now we need displacement through the breaker block. We have gotten our stop hunt into our higher time frame areas of interest. We then need displacement through the breaker block. When it displaces through the breaker block, we need an FVG aligned with the breaker block. Seeing that, price displaced through the breaker block and left an FVG aligned with it during New York Open. This would be the first moment in time that I would be setting a limit order for a long at the beginning of the breaker block. Stop loss for the position always goes below the breaker block. We always look to aim for 2R. let's see how the position plays out. You get an entry the very first moment price touches the breaker block, and you're in a position. The position sits around break even for a little bit and starts moving in its intended direction. At no moment in time am I trailing my stop loss. At no moment in time am I trimming profits. I'm simply waiting for validation or invalidation. Price continues higher and begins to turn around. I'm not being fearful and raising my stop loss up. Price will either invalidate me or validate me. For the individuals that want to raise their stop loss up, they would be taken out at break even here. When in reality, the position never gets invalidated, and the next thing that it does is moves right to target. Position achieves 2R, but depending on your psychology, depending on your management, you either gotten taken out at break even or you got 2R. The reason for being mechanical is that price can and will do whatever it wants whenever it wants to. The reason for being mechanical is that if you're going to allow your emotions or your psychology to make decisions, you're going to run into situations like this, where your entry function was correct, your idea was correct, the position played out correctly, but you got taken out at break even because you were fearful.
Well, thank you for joining us today and sharing your experiences and model. For any of you in the audience that wants to learn more, feel free to check the links in the description below, and you can find his YouTube and Twitter and his Discord as well, if that is something that interests you. This is the first type of video I have done in this way, so if you did enjoy it, please let me know in the comments section below. And with that, hope you guys have a great day. See ya.